Past 20 years have been quite a ride. Look, I'm a specialist in the energy transition. 20 years ago, we did not call it the energy transition. Actually, I started the business in investing for Goldman Sachs way back in 2002. We didn't know what to call it. We called it alternative energy. And then all of a sudden it became clean energy, clean tech, climate, et cetera. Energy transition is now roughly, in terms of total assets around the planet in space, is about 400 times the size when I started. So that is quite a seismic shift. Today, we're getting close. In the next few years, we'll reach roughly 50% of the world's electricity generation mix will be from low carbon sources, some of that nuclear, and the rest of it, most of it will be other renewables, hydro a little bit, but increasingly solar, wind, and other types of renewables. So it is a seismic shift, total energy investment every year now. Energy transition is double that of fossil fuels. So this energy transition is happening, and it's just been an amazing time for me personally to be a pioneer in the space over 20 years ago and to see it evolve the way it has. And so I consider it a privilege. Well, clearly there's nervousness and there's some dislocation because investors don't yet know what's going to happen. And my guess is that the transition team has not completely formulated their plans. They have certain things they're going to do. Here's what we do know. Certainly, when President Trump comes into office, he's going to sign a series of executive orders, both reversing the executive orders favoring climate investing, the clean energy, et cetera, but the entire climate area, and he'll reverse most of those, if not all of those, and he's going to also accelerate drilling. And so that we know, that's baked in the cake and everyone understands it. When administrations change, when one president comes in, another leaves from different parties, this is standard. And so that's not surprising. What we also have to understand is that for Congress, although the Republicans will be in control of both houses, there's a range of views around the energy transition. If you look over the last 20 years, here's what you find. All of the above, which includes fossil fuels, nuclear, and low carbon energy, has been the dominant theme, partly of Democrats, but clearly of Republicans. And you also find strong bipartisan support in favor of renewable energy tax credits, which are the main incentives that drive capital formation in the United States. I would predict that that is not going to change much. It might change a little bit around the edges, but I think what President Trump really wants is to see more domestic manufacturing, even than under the Biden administration, which promoted domestic manufacturing incentives. So I think we're going to see more of that, not less, but we certainly have to wait and see. Look, we focus on the energy transition writ large. We're not beholden to solar or wind or batteries, hydro, et cetera. What we focus on is opportunity. And so we're a mid-sized firm and where our focus is on value creation. And we want to basically build or create assets for institutional investors, a large of what we do. We also have a private credit strategy where we deploy capital into other people's projects. But a lot of what we do is build projects for institutional investors to invest in. I believe that's going to maintain a consistent growth pattern over the next several years. And the reason why is that government policy moves around the edges, it moves private capital, but the energy transition is being driven by consumer preference, it's being driven by low cost and dramatic interest all around the world. We're talking about a sector that is now attracting $2 trillion in capital globally and $300 billion in the United States alone. So that may move up or down a little bit, but I don't think it's going to change dramatically. Specialist managers, first of all, a lot of different types of investors invest in this space, and it's become almost an asset class by itself. What I think we do, as well as anyone, is understand the current, basically what's driving investment today and the trends that are going to drive investment in the next 5, 10, 15 years. If you look back at our track record, we were early adopters of solar. early adopters of residential solar installations, and in a number of other asset classes, early movers, where we can capture the alpha of exponential growth before other investors are seeing it, because we're that close to basically to the science, to the opinion shapers, to the early investors, the early adopters. And so we understand the ecosystem at a very, very deep level. And that enables us to figure out how and what, not only in what sector to deploy, but also what strategy suits us and our investors in the best possible way. And that can vary very widely from subsector to subsector. So we look at value, or basically capturing outperformance at a very granular level, and I think that gives us an advantage over other investment firms. So energy transition is so large today that it's almost an asset class, not an area of specialty. And so what we do as GPs and as direct investors, we actually are unique. We do both. We start companies, we back early stage companies as direct investors, and then we have particular strategies in which we have funds that we form around those particular themes. And so what we're focused on is understanding where is value and where is risk at a very granular level. We study the space exceptionally closely, and we look to mitigate as much risk as possible and to make our investors, help our investors enjoy the upside of those investment specialties. And so I think that's something that we do very well, but resilience here is actually being able to roll with the punches a little bit, particularly in a politically sensitive asset class like us, and focus on the underlying themes, the economics, the markets that drive adoption, and not be too dependent upon policy or government handouts. That is something that we're very careful about. I, in particular, encourage my companies to not actually seek capital from the government, but rather to take advantage of incentives that are in the law, but not actually to look at them as a source of capital. And I think it's also a distinction in the way that we think about investing in this space compared to others.